Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. I'm going to present Tracking the Forex Market Together webinar part 2 between 14 and 14:45 GMT. I gave the part 1 between 8 and 8:45 GMT, explained the simple market tracking technique by identifying the type of moves in relation to that of the market timing used by that of the players. Besides, I also explained with regard to the simple trading strategy of using the hedging order to limit the risk on the last making position and use the trailing stop and limit order in profit making positions. So during this part 1 of the webinar, I just took a buy position in GBP at 1.5688 because they made a quick drop around 8:30 GMT and then subsequently started gaining the levels around 8:30 GMT. I took the buy and I kept the limit order near that of the high set at that time and kept the hedging order 30 pips below the market, and the market quickly went up and closed my position with profit of 56 pips. I kept the buy order near that of the low. In the case of Euro and GBP, they were not filled at that time, so I removed those orders. So now I'll explain to you what could be the possible moves that they intend to make during this particular day, because everybody is anxiously waiting for FOMC meeting minutes and also their statement and the rate decisions and the conference, etc. So before that, we will just quickly rush through the live market quote page. This is the link for it. I'll also give it in the .com window. You can open it in a browser. I'll focus the camera over that of the live market quote page. You find in the majors, Euro is currently trading around 1.2710 and 11. Then low was 1.2662 and they have not breached it, but the high they have breached it, and 25 pips positive net change is seen. In the case of yen, also showing positive net change during the European session. We know that yen was making nominal negative net change but did not breach the low, and they breached the initial high, and then you find positive net change. And in the case of GBP during the late European session, they made further rise to 1.5778, and as I explained that during that start of the session, they made the drop in the case of GBP and gained towards close and then come down a little bit from the high. So now it is making about 15 pips positive net change. They are making only contrarian moves because Euro and GBP are making the USD weakening move and the USD yen is making the USD gaining move, which is referred as a contrarian move. With regard to that of the Swiss franc and Swissy USD CHF, which is making 19 pips negative net change when Euro is making about 25 pips positive net change. So it is making lesser dip when compared to that of Euro rise. But with regard to that of the commodity pairs, USD CAD is making 11 pips positive net change, whereas Australian dollar is making 6 pips negative net change. So when the majors are showing mixed moves, that Euro and GBP primarily making USD weakening move, whereas the commodity pairs are making the USD gaining move. So this is the type of contrarian move. They have started doing it from that of the session start time, indicating that they are handling the crosses. Whenever they make contrarian moves, they handle the crosses. Why they need to handle the crosses without breaching the high or the low? Because the volume diminishes in the majors, so they try to make quick moves in the case of the crosses and handle and try to earn some money. Then towards the breakout of the major news, they come to that of the majors again, make quick moves. Then they focus on the majors. So we need to understand when they are making focus on the majors, when they are focusing on that of the crosses, so that when they are focusing on majors, you can try to trade in majors. When they are focusing on the risk during mid sessions, then it is better to trade in crosses at that time rather than simply taking a buy or sell position in the majors and waiting the whole time. And once you wait for a prolonged period, you lose your patience. That's what the players try to do it for the traders. So we need to understand the session timings. So European session got over by 13 GMT, and they quickly gained the level in the case of GBP at that time, and also Euro to that of 1.2719 nominal gain. But in the case of GBP, as you know that GBP is a sentiment creator, and they made a bullish sentiment by quickly gaining the levels in the case of GBP. And you know, during the start of the European session, they created a bearish sentiment after 8:30 GMT data release, and then subsequently they created the bullish feeling. So any fundamental data, can it change the market that way? So obviously now we will be able to understand that the data was not rumbled much, and immediately the players were focusing on the other way of trapping the traders and quickly gained the levels in the case of GBP. Now after the gap time, we have come to the US session. 13:30 the US session starts, and 14 GMT we are now, and so from up to 20:30 GMT the US session prevails. So I'll just go to that of the economic data which are to be released today, so that I'll be able to explain to you what sort of moves they could do it using the data release time frame. I just focused here the forexfactory.com calendar. So it is 20th of June, and it is in GMT time frame. I just set it in GMT time frame, and you find that 14 GMT crude oil inventories is there, which is given in orange. Then afterwards 16:30 GMT FOMC statement is expected to be released. And now if you see that, let me just rush through this and go to that of the initial lows and the highs and explain to you how we are able to derive what sort of moves they are going to do it. If you learn it, then you will be able to do it on your own. Then federal rate decision is there by 16:30 GMT, and unchanged is expected, and so not much of a reaction. Then FOMC economic projections is there by 18 GMT, and 18:15 GMT FOMC press conference. And this could, once it gets over in 15 minutes time frame after 18 GMT, once 18:15 it starts, and they could ask questions, and probably they could make in the conference some remarks, and from there the players or the market could derive certain information. But let us not go into the details of what they are going to derive out of that, but we are going to now focus on what sort of moves they are going to do it during this particular time frame. So for that, I just refer it to that of the Asian session initial lows and the highs. So in the case of Euro, the Asian session high was 1.2690. The low they are not breached still, and still they are holding above that of 1.2690 throughout the European as well as the US session start. So now it is 14:09 GMT. Still they are holding above this particular high. In the case of GBP, the initial high was 1.5732, and they are still holding above that of 1.5732, and currently trading around 1.5737. Euro is around 1.2718. So you are able to understand that how they are holding it. So anybody who has taken a sell position, during quick move, if you take a sell, then you will be able to book 20-30% profit. But when they are holding, if you try to take a sell position, you will be waiting. So that is what they try to do it. And in the case of yen, the low they are not breached it, but the high they breached it. 79.12 they breached, that was the initial high, and come to that of 79.49, and currently trading around 79.45-49. So USD yen is making the USD gaining move, whereas Euro and GBP are making the USD weakening move. This is mainly to gain. When they gain levels in the case of Euro, GBP and USD yen, we know that yen crosses, they are rising the levels. Then CHF, they just breached the low, just opposite to that of breaching the high in the case of euro, and 94.64 was the low, and then they breached and formed a new low 94.39, and currently trading around 94.3640, closer to that of the new low they have formed and trading below that of the low. And in the case of Canadian dollar, they made a brief upward stop during the European session. 1.0195 was the high, and they went up to 1.0197 and came down and breached the low 1.0176 and formed 1.0160 as the low. So as I explained many times, in the case of Canadian dollar, when they initially make an upward stop, and you can take a sell. If they make a downward stop, and you can take a buy, you will be able to book profit easily. That way, they make on a daily basis the upward and the downward stop in the case of Canadian dollar. And in the case of Australian dollar, they showed a negative net change initially. Now it is coming to that of flat condition, 0.0000 net change. The low was 1.0168, that was not breached. The high was 1.0195 initially, and that was breached and formed new high 1.0210. All nominal gains, they have just done it, but currently holding below that of 1.0195. So in the case of Euro and GBP, they are holding above that of the initial high. In the case of Australian dollar, they are holding below that. What sort of trades we can think of? Let me go back to that of the tracking the market of PowerPoint presentation. So we are in the US session. So we are able to understand that US session starting, how they are making the moves. So when the market is from the start of the session, we note down the initial lows and the highs. That is what I showed it. And then net change also I explained. They are all very nominal net changes. And then the market is awaiting for the breakout. So what sort of moves they could do it? So initially they made a small dip during start of the session. And in the case of Euro and GBP, but still they are not gone below that of the initial high. And then they started gaining the levels now. So there is a technical trade potency because first 30 minutes they are not breached the high and come below. So there is a technical trade potency, and they could just gain from here some more level and try to breach the high. Up to what time? Now we will go to that of the calendar. So how they are making moves, we need to understand. So they will try to gain the levels up to 16 GMT. Then the 30 minutes, they will try to make some announcements or expectations pertaining to that of the FOMC statement and also the Fed rate. And you know that rate, the expectations is unchanged. So they will be looking for the statement. So up to 16 GMT, they will gain the levels in the case of Euro and GBP and probably breach the high in the case of GBP and also make an upward stop in the case of Euro. So the first move will be from here now up to 16 GMT upward move. So you can just make a note of it, and during this particular session you can watch how they are going to do it. See, I am just giving you how they plan it. Okay, if you understand, then you will be able to track them very easily. Then 16:30 GMT, they will try to make volatile move on the downside as well as the upside, and then they have to wait up to 18 GMT. So make for about 10 to 15 minutes up and down move without breaching the high or the low, because it is unchanged. The expectation is not big, and everybody will say that we will wait for the conference, whether they are going to announce Q3 or if there is going to be an indication with regard to quantitative easing 3. So using that, similar to that of the Greece crisis, they will continue to create uncertainty to that of the traders. They are going to announce, they are going to announce, they are going to announce, and give alternative also in case if it is not announced. So that way they try to create all sorts of uncertainties. And once they create all sorts of uncertainties, we know that the traders will keep away from that market. But at that time, those who have taken the positions will try to cut the positions. And then when the position is making loss out of fear, then later on they find that after 1815 FOMC press conference, and they would not have uttered much of a word during this particular conference, and the players will start gaining the levels by making a brief downward move from 1815 to 1820 probably, or 25, and start gaining the levels. In the case of Euro and GBP, holding USD yen, and make a little bit of dip in the case of CHF, and try to gain some levels in the case of Australian dollar. That will be a nominal gain, but they will gain more levels in the case of Euro and GBP after the FOMC press conference. So I explained the type of move they intend to do. From 14 GMT, they are expected to hold above that of the initial high and gain up to 16 GMT. Then 30 minutes, they will try to create a little bit of dip and build some sell positions and quickly make a dip around 16:30 GMT and buy back again and try to make some volatile moves here. And from 18 to 18:15 GMT, they are again expected to hold and make small swing, just show that the market is alive. And then they could quickly dip during the start by 18:15 GMT, a false move. Then in a matter of another 5-10 minutes, they are expected to gain the levels, and Euro and GBP are expected to gain the levels after that of the FOMC press conference. So I have given you how exactly they are going to make moves when you find sequence of data to be released in a given time frame. So you can make a note of it and see how they are handling between 16:30 and 18:15, and later on how they are doing it. You can understand. The first indication when they are holding above that of the initial high, that means they are trapped the short sellers, and they want the short sellers to do the short covering before making a dip. During the volatile moves, they have to make dip and rise. No? Otherwise, continuous rise, they will not be able to do it. They have to make necessarily a dip and a rise. A false move is a must. So by 16 GMT, because of the fear, the traders who have gone short might go in for a short covering, then they will make a dip. And the traders holding long will quickly book profit during the dip, thinking that Q3 might be announced, but after 18:15 GMT, they are expected to gain the levels in the case of Euro and GBP. So this way, if you are holding long position or holding short position, they are bound to trap, or they are trying to give you lesser profit if you are afraid. So how to get rid of the fear in such a situation? Always understand, prior to the of the data release, they will make a false move. They make a dip, understand they intend to make a rise after the data, and it is 100%. You can just find out, because they have to make cunning move before making their intentional move. There is no other goal. So in the process, they try to trap the short sellers as well as the long holders alternatively. So they are not bullish or bearish in euro. For 30-40 pips move, where is the necessity to call it as a bullish move or a bearish move? These are all up and down moves. They try to make it in order to trap those who try to buy after the rise, and also try to trap those who sell after the drop. So as a simple and a meaningful trader, or a trader who has got a lot of sense, will try to buy after the drop and try to book profit after the rise. So how you determine this is the high or this is the low? When they drop and stop cutting the new low for 30 minutes, then they will make the rise. In the case of GBP, during the European session, I said that they made the downward stop, and the initial low was 1.5710. They came down to 1.5659 and reversed quickly. In a matter of 30 minutes, they had just gone above 1.5710. That is a very clear indication of a downward stop, and before making the upward rise, what the data has done it. And 8:30 GMT, the data release was the MPC meeting minutes. it was in line with that of the expectations. Why they made the drop? Why they made the rise? God only knows. So let me go back to that of the PowerPoint presentation. So we need to identify the type of moves, whether they are doing the move, a quick move or a slow move. Quick moves are like stop and false move and extended move. Intentional move will be always slow. So intentional move, they just swing and gain little bit level, swing and gain little bit level, swing and gain little bit level. This is how they just continue to gain, which is an intentional move. Now they are doing it on the upside. And yesterday they have been doing it on the downside. So alternatively they do it. And in the process, you saw that GBP made a quick drop and then gained. So quick moves are false moves. No, that means they are cunning moves. So they quickly drop in order to trigger the fear and later on rise, and in the downward move they induce the long holders to liquidate the long positions and turn short after the support is breached, and when it goes to below that of the support level, immediately people think that it will drop further down to zero, so they just take a sell position and later on find out what could be the next support and try to cover it without keeping stop at entry. Then they show about 10-15 pips profit and reverse it quickly. And you know that I was telling you they were trapping the short sellers, and that is why I said that during the close of Japanese session, even though they firmed up, I discouraged doing a sell and buy trade in the case of Euro and GBP, so that you will be looking for a bigger trade of making more profit in that process. So when you look for bigger prey or bigger profit, then you will not bother about the small ones. And if you focus on the small ones, you will miss the big ones. It is a normal human psychology. So hedging, I'm not going to explain it here because in most of the trading platforms in the US, they don't encourage hedging. So I'll go to that of the trading. Now in the case of Euro, they are still holding above that of the initial high. So I just take a buy position because already the time is exceeded. 14:23 it has become. Still, I will try to take one position because at least I'll be able to book 20-30 pips profit. So buy 1.2718 and the exit. The exit is too close, 1.2724, and that is a high set per day, and they are bound to breach the high around 16 GMT. So I'll keep 45 pips from that of the entry. So 2718 plus 40 will be 2758, and 1.2763 will be 45 pips. This is how they measure that and do it. So I am also doing it along with them. So, and I cannot simply say that I am 100% sure, and I do not want to take any unlimited risk of not keeping the stop. So I'll keep the stop 30 pips below, and the stop will be 1.2688. So we'll see what happens to that. In the case of GBP, still holding above that of 1.5735. So I'll try to take the market by 1.5745 with the exit 1.5776 is the high they have set it, and there is a likely chance of making about 45 pips. So the next psychological level, because the first psychological level they have gone it is 1.5775. So they've gone above and come down. So the next 25 pips above the psychological level will be 1.58. So I'll keep 1.58 as the limit and keep 30 pips below the stop. $1.5715. So This is the trade setup because I explained how they are holding above that of the initial high set around 3:30 GMT during the Japanese session, because they use them as the reference level throughout the day while trapping the traders. So we also need to use them in order to understand their expected market moves. So let me just minimize the PowerPoint presentation and focus the camera over the top of the live market quote page and try to answer to the questions which are asked here. Because today there is an anxiety prevailing in the market, and so people wanted to know, even in the earlier webinar, I have seen that everybody wanted to know what is going to be the outcome of FOMC rather than learning any particular concept. So I thought that I should address that particular issue so that the traders could be able to understand how the type of moves are really helping us to understand how the players are trapping alternatively the traders. That is why I always say that when you take the position during start of the session, try to close it during the end of the session and not to hold it beyond that particular time frame. And in case if you want to do the position trade, that is different. In case if you want to do the intraday trades without attracting the overnight interest, then it is better to close the position within the session so that you will be able to continue to trade rather than waiting the entire day and trying to become anxious, because they try to change the I forgot to give the link for the live market quote page because the focus was elsewhere. Okay, now in the live market quote page, I have not seen any questions which are being asked. In the live market quote page, you find that Euro has made about 34 pips and GBP has made about 18 pips. So which is again a contrarian move. Euro is gaining more, GBP is gaining less. And during that of the European session, Euro was gaining less and GBP was gaining more. And they initially made the drop in the case of Euro GBP, and now they are gaining it, going to that of the high. But still, the spread between the high and the low is very low, and they could revisit again 81 and build sell positions, and later on they are expected to bring it down to 78.80. Similarly, in the case of yen, when Euro is making positive net change, yen and GBP are also positive, showing positive net change. As a result, you find Euro yen has gained about 93 pips and GBP yen has gained about 96 pips. Even though in the case of Euro and GBP you find lesser gains, because of yen gain, you find almost 200 pips gain in the case of Euro yen and GBP yen. So this is how they just create all the psychic conditions or fear to that of the traders. It can go to zero, and that is how they will try to bring down the crosses. And later on you find, okay, probably 97 could be the support, 96 could be the support. They will try to breach all. Now they are doing it in the case of gold and silver that way, and later on they are expected to spike it up. So when the traders all turn long when they are gaining the levels and thinking that gold and silver are safe havens, then they know that the traders are holding long. There is no point in raising and giving them profit. So before the uncertainty, before the data release, namely today is FOMC. Every day there will be uncertainty, the data release. So today's condition, they used FOMC, and before that they are making the drop, and later on you will find upward spike in the case of gold and silver. And those who had taken in a hurry the long positions and over traded, taken too many positions, will cut the position. If somebody has got only very little position and not worried about the margin fear, then you will be able to hold and book profit. This is how on a daily basis you come across the market is making the up and down moves and trying to trap the traders. So the traders lose primarily because of over trading. It is not that they are not able to understand the market, or not that they are not able to read the chart properly, not that they are not able to use the right type of tool to understand. Predominantly, the traders lose money or lose that account because of over trading, taking too many positions at a given time. So instead, if you focus on taking only one position at a given time and try to focus and book profit in that, then think of another position and keep in mind market continues to give trading opportunities forever. It is not that you missed that opportunity. And if you think that Australian dollar, when it was trading around 97, I was telling that it is going to go up, and many people were commenting on me. And so at the time, if you have missed 97 by taking a buy, it doesn't mean that immediately you have to go in for a sell and buy trade. This is a wrong approach, because immediately when you missed, you think of alternative strategy of doing a sell and buy trade. So then what happens when you always refer Australian dollar with regard to the recent low, and when you refer to the recent low, then immediately it is high priced. So there comes the confusion. Then immediately you think of selling Australian dollar after the gain, but they are only doing a nominal dip in the case of Australian dollar and holding around that of the initial high, when Euro and GBP are gaining the levels and keeping in tandem the sentiment. Australian dollar is also expected to gain the levels after FOMC. And only thing is, the commodity pairs will lead the rally and lag behind. So lesser rise will happen in the case of commodity pairs when compared to that of the majors. Because when they move the majors in a big way, they make big money. When they move the commodity pairs in a big way, they don't earn equivalent to that. So that is the difference between the making the moves in the case of majors, because the number of traders participation is more in the case of majors and less in the case of commodities. So Shan has got a question. Australian dollar, is it likely to reverse technical correction tomorrow? No. It might make about 20-30 pips or 50 pips drop if needed as a knee-jerk reaction for a data release and things like that. It all depends how far they are going to gain the levels in the case of Australian dollar. And they are not expected to drop it in a big way. In case if you do a sell and buy trade, you can aim for about maximum 20-30 pips profit, and 10 pips could be ideal. Instead, you wait for such dips and try to take buy positions, and they're expected to make further rise in this week in the case of Euro, GBP, Australian dollar, as per my forecast algorithm. Comment on US dollar and USD yen for intraday. See, USD yen, they made the drop and they consolidated below that of 79 and they started gaining the levels. So once they start gaining the levels, don't jump into the market near that of the high, because they formed the high and stopped cutting the high, and they are expected to make a quick dip and make one more rise, and that dip may be a shallow dip. So don't think immediately you can do sell and buy trade, because they wanted to make a contrarian move on the upside now. So that means they are trapped the short sellers in the case of Euro yen and GBP yen, and using FOMC as a trigger, they are expected to make the gains in all the three. You will be wondering, what is that? USD yen is also making a rise after FOMC. They will give some excuse for that, and they are expected to gain the levels. So during such dip, in the case of USD yen, try to take a buy, or in the case of Euro yen and GBP yen, and always keep hedging order. In the case of crosses, keep 50 pips hedging order to limit the risk. So whatever the type of reading we do, always understand there is an element of error in human decision making. So we cannot afford to lose money for our wrong decisions. we can limit the risk by keeping the hedge, and once the market stabilizes, you can understand whether to hold the hedging if they continue to drop, or to simply close the hedging, understanding it was filled during a downward stop and before making a rise. You simply close the hedging with a nominal loss, and the buy position will be making profit. And that is how we should be able to think of doing the trading in the long-term players' intentions. We need to identify what is going to be the long-term intentions of the players, not what the chart tells us. Because invariably you find whatever but the type of moving averages we try to use it, and whenever they breach the moving averages from one side to the other side, we suddenly turn from bearish to bullish, bullish to bearish. But ultimately the players create the market sentiment and act against it of the traders, and that you need to understand. Once you become bullish, they will try to make a bearish move, and you will say long-term bearishness still continues. You are bound to say that, because once you turn bullish and become disappointed when they make a drop, you say that long-term bearishness continues. But they will try to make a long-term bullish move on the upside. So this is how they create the market sentiment and act against that of the traders. So don't think that I got any sentimental attachment to that of Euro and GBP. I only view them as tradable currencies. So that you have to keep it in mind, and we have to keep in mind what they intend to do on the long term and do in line with that of the long term moves, so that you will not be trapped vulnerably taking a lowest level sell or highest level buy. Then SK, do you ever use charts or just the quote page? I was using the charts for several years from 1976 up to 1997, and you know that at that time not much of an applications were available to place over that of the chart, and they're all priced at that time. We need to pay nearly about $300 to get the charts for a monthly basis, and I was doing all the analysis with regard to the charts as a statistics professor, and found that if you go in depth to that of the chart study, we are easily trapped. Then I found that they are giving an indirect method of touching your nose. Suppose there is an itch in your nose and you wanted to just scratch it, and if you can simply take your hand and just scratch it and get rid of that particular irritation. Instead, they just guide you to take the hand around that of the head and scratch your nose. That's what I found, that they insist upon using the technical analysis, but the players are not following it. Then I found this particular algorithm after an extensive study for 12 years, and also done the market reading and gathered the information from various sources and giving you all these things here. In Aviator, where is Euro and GBP expected to go this week? And they could be able to reach 1.30 in the case of Euro and 1.59 to 60 by Friday. That is the expectations by that of the forecast. And you know, the week beginning false move, they made that drop, and then Tuesday they just gained the level, and Wednesday they are further gaining the levels, indicating that Thursday and Friday they intend to make further rise. Then callers. If the Fed announced that there will be no QA3 or operational twist, okay, let them use any terminology for that matter. And earlier they used to say it's quantitative easing, and then later on found that 1 and 2 were announced, so they just abbreviated it and started calling it as Q3. Probably operational twist also, they may say it as OT later on when they continue to use it. And what would be the reaction of the market? See, I have not gone into the details of what the Fed is going to say, callers. I just looked into that of the time frame during which the data to be released, and accordingly I explained what sort of moves they are expected to make. After 16 GMT they are expected to gain the levels. On that basis I just taken the buy position at the market, even though there was not a better level to take it, because 14 GMT is the ideal time to take the position. Wait for 30 minutes from the start of the session. But the webinar started around 14 GMT. I cannot jump into that of the position without explaining how exactly I am just taking the decision to enter into the market. Doesn't matter. Let it be slightly higher, no problem. But still, I'll try to close it around 16 GMT, or I don't mind waiting up to 19, 20, 30 GMT, because the forecast says they are expected to make the full rise. In case if they just drop and hedge me, I'll try to keep stop at entry in the hedging and try to book profit in that of the hedging if they continue to drop, and stop cutting the new low, like how they have done it in the case of GBP during European session. And once they stop cutting the low for 30 minutes and I know that they are going to reverse it, and just close the sell position on the downside and keep 30 pips below another hedging order to limit the risk, because I am still holding the buy position. And once they continue to gain, I'll also rise the hedging order to the upside until I'm able to keep stop at entry in the buy position. And once they continue to gain on the buy side, I'll try to use the trailing stop in the profit making position, and also the limit to close the position after identifying whether it is an intentional move on the upside or an extended move. An extended move is a quick move. Then within 2 hours, I'll close it. If they slowly gain the level, I know it is an intentional move and they will gain till end of the session, and late session I'll try to close the position. Hope you're able to understand how I read that type of moves in relation to that of the time frame. So when you just use the live market quote page, the time frame, and also the net changes, there is no need to use the charts according to me. It may be wrong decision, I don't know. But I find that my trading is going really good. Okay, no more questions. So let me go back to the other PowerPoint presentation. So currently, my GBP position is making 3 pips loss, and Euro position is making about 9-10 pips loss, but still not hedged, because I'm not worried, because I got a hedging order to limit the risk. I'm not taking unlimited risk. Once the position makes profit of 20-25 pips, I'll keep stop at entry. If they hit the stop, still I'm not worried. I know very well if they hit the stop and they will show a new slightly lower level for a better entry into the market, because as long as they hold above 1.2690, they intend to gain the levels. If they go below 1.2690, the initial high, then I'll try to sell there and quickly book profit near that of the low 1.2662. And take a buy there if they don't breach the low, or if they make a downward stop, and I just watch it for 30 minutes. They stop cutting the new low, like how they had done it in the case of GBP during European session, I'll try to buy. If you are a smart trader, you can continue to trade along with them. And for that, the market perception has to be perfect. So ultimately, market perception gives you the profit. You have to understand that. It is not whatever the sophisticated analysis you do, how you perceive the market. That is why many of the traders, they say that my gut feeling I follow. And sometimes they just say that their gut feeling works. Why? Because they perceive the market correctly. If they perceive the market correctly and keep remembering all the levels, and they don't just always relate to the current level to that of the lowest level for the season. If you just refer GBP to 1.5290 or Euro to 1.2290, this will look high priced. But you have to relate it to that of current low, today's low and today's high. Then you will be able to perceive it properly, whether it is on the downside or on the upside. Then you will be able to easily identify the trades. That is why when you use the long-term charts and it will look bearish, you hesitate going buy and sell trade. And you call it as a pullback, and then when there is a pullback, we can sell. They will try to give during back small profits of 30-40 pips, finally trap you for 100-300 pips profit in one go using some data release as a trigger, and vulnerably will get caught. Their main objective of making consolidation is to trap the traders that way. Make the traders habituated to that particular range and try to breach the range of the downside, breach the range of the upside, and take it next trading zone. So understand that they are smarter than that of the traders. So by using all the conventional method, it is next to impossible for us to understand and read their intentions. But if you make it very simple, whatever be the type of hidden agenda they have to reveal it in the market. Identify the cunning move, then you are in the market with the right perspective. So I take this opportunity to thank you all and also FX Street. And it is a busy day in FX Street because of the conference. Still, they are hosting all the webinars and recording it. I am thankful to that. And I wish all the success in the webinar, in the ITC conference. And my contact website is here, and my contact email ID I given it, and also my chat ID in case you want to contact me live. You can add me as a contact in your Yahoo Messenger or MSN Messenger, or if you want to call, you can call me through this number. I am in India. So see you again tomorrow during Asian session live market analysis. Thank you one and all. Wish you all very happy trading.